Facebook reports earnings that miss estimates, but daily average users are up. Stock up sharply this morning. Is that the bottom for the NASDAQ? That's coming up on 3 Minutes on Markets and Money. So yesterday after the bell, Facebook reported earnings. Again, daily average users up, but revenues missed estimates. Forward guidance not well either, but stock is rallying this morning. In fact, it's going to open up around $202 a share this morning. Again, that's right at the 50-day moving average. There's a lot of resistance right here for the stock at the 50, the 20-day moving average. And importantly, the stock is still on a fairly elevated sell signal. So despite the rally in the stock this morning, there's certainly still some concern here. Facebook was down almost 50% from its 52-week high over the course of the last 9 months. So again, this reflexive rally, not surprising here, but given the weakness in earnings and the weakness in outlook, we're a little bit concerned about whether or not that rally can stick. Importantly, though, Facebook is one of those top 10 stocks in the index. As we talked about in last weekend's newsletter, the top 10 stocks of the NASDAQ, Apple, Facebook, Google, Amazon, make up 33% of the market capitalization of the S&P 500. So again, when a company like Facebook rallies 14, 15, 16% in a day that has such a large market cap weighting, that's going to lift the entire index higher. And that's what we're going to see this morning. Let's take a look at the NASDAQ. As of yesterday, the NASDAQ was down about 22% for the year. Again, kind of in a bear market already. The S&P 500 actually holding up a whole lot better because of the allocation mix in the S&P 500. It's only down about 12% for the year. Still a lot of pressure on markets this year so far because of outlooks and concerns over the war, inflation, expectation for earnings decline, etc., has all been weighing on prices of stocks. But underneath the surface, the devastation has been a lot more significant, as we talked about in last weekend's newsletter as well. You take a look at the number of companies that are larger capitalization companies, 7 billion and up in market cap. There's a tremendous number of those companies that are already down 40, 50, 60% from their 52-week highs. So underneath the surface, there's been a lot of devastation. Market breadth is terrible, really, on a lot of different fronts. But again, the market is so oversold here. The NASDAQ, of course, down roughly about 2 standard deviations from the 50-day moving average. Again, very oversold here on several levels. But not really a sign here at the moment that we're about to see a big uptick. Now, the lift this morning that we're going to get from Facebook is going to help get the NASDAQ off this support of the March lows. Now, that's a good thing. As we talked about in this morning's daily commentary that's on the website at realinvestmentadvice.com, we are looking for a bounce off this February lows that we saw. That's holding good support. We've actually retested this multiple times. In fact, that low goes all the way back to September. So there's some good support right here. This bounce this morning, and it needs to hold. We tried to bounce yesterday off this low. It was unable to really hold that bounce. We kind of wound up flat for the day, but we need to see this bounce actually hold. And if we can get a bounce that holds, we should get some follow through that will push the NASDAQ back up towards the 50-day moving average. Now, as we've been talking about, there's still a lot of risk going forward as we get into summer. More aggressive Fed rate hikes, tighter monetary policy, interest rates are higher, the economy slowing down. Earnings estimates will likely be degraded here over the next few months. That's going to kind of cap upside moves in the market. So use that rally back towards the 50-day moving average as an opportunity to reduce risk, rebalance portfolios, and then we can prepare for what the next move in the markets will likely be, whether it's up or down. That's 3 Minutes on Markets and Money. We'll see you back here next time.